Welcome, everybody. Welcome to my webinar, broadcasting live from Mexico City. Here, my local time is 8 a.m. 2 minutes past the hour. GMT time is 14 hours and 2 minutes past the hour. After this, what is not summertime, it's switching back the hour that we lost in the summertime. So for some people, this it maybe is taking place in a different time, but it's the same old webinar. And WoW Trade stands for week over week trades. Basically, binary.com allows me the opportunity to share my opinions and insights on the market in a weekly basis. I've been doing so for, if I'm not wrong, pretty much 3 months so far. I also deliver webinars in Spanish for the ones interested once every month. And well, let's begin. Well, a little bit of me, and even though most of you already know this story about me, and when you sign up to the webinars, this is the like the bio of myself. I always consider it important that I share this every time because it's very important to know where the one that is speaking to you in front of you, in this case in this webinar, you to know where he comes from, his history and the background. My name again is Alberto Alvarado. I live in Mexico City. I was born here in Mexico. I've been trading the markets for more than 10 years. It should be like 11 years this September, or 12, I'm not sure, I believe, but more than 10 years of experience. I started in 2005 trading my first live account of $10,000. I lost it all in less than a month, and after that I decided to continue trying, but taking seriously my self-learning on this trading craft. And by 2007, I started grasping the first results of my effort, just to see my account evaporate in the financial crisis of 2008. And then I had to decide to whether to continue or leave it. It was a very tough decision overall in the personal side, but I decided to continue. And the thing that 2008 crisis left me as an experience is what I thought that what I called my edge at that time was not complete. So I decided to start all over from scratch, adding some subjective, intuitional, and creative elements. The ones that a lot of forums and traders are very resistant to include in their trading. And in my case, it ended up working very well. And what you see here is a result of that experience. Besides that personal edge that I manage, of course, I use the traditional ones like the technical analysis. I use free tools like MACD stochastics, RSI, Bollinger Bands. I don't believe in custom indicators because I believe, and what I learned through these 10 years of experience is that I'm convinced that the one that needs to adapt to different conditions is a trader, and not for every environment a new tool. So this is my experience, and that is why you won't see never in my webinars tweaking the indicators or trying to find a super accurate parameters of the MACD or whatever. No, instead of that, what I insist on everyone that wants to really take a serious approach on trading is that they need to rely the less you can to technical indicators and use them only as confirmation tools. Since then the usage for the technical analysis is only that, well, one stops building a cathedral around the technical analysis concept. That's very important because when we start the trading world, we usually believe that the technical analysis is the solution, and by no means is any kind of solution. It's just a tool that you use it to confirm your insights and your edge. In the other hand, what I use is, of course, fundamental analysis, the major news. I am aware of them. I make analysis on them. I usually, when I consider it accurate, I show you here in the webinars what I call fundamental dynamic levels that are very reliable support and resistance dynamic levels that could help you shape or at least have the overall sensation of what is the most likely movement that could be next. And from that, plus your edge and your own analysis, uh, it is easier that whether you decide to go long or short at some point, you know where, if you decide to go against the most reasonable trade, well, maybe you will know that you need to watch it closer and to watch it every hour because you are going against maybe the probabilities. So this is pretty much about myself. And I just want to stress out that what you really need to do when you start trading is start developing the skills that would lead you to your edge and not believing that maybe technical analysis is the secret is to find the best parameters for the technical analysis. This trading world doesn't work that way. You need to work, and it's a long path of learning, of committing mistakes, assuming losses, and this is more like a long-term career than a sprint. Okay, so let's begin. For the ones that haven't subscribed to my personal YouTube channel, I strongly suggest you to do so because overall this week I have uploaded 2 videos there. Usually this channel is very quiet. I don't use it for spam or something like that. Just when I really have something important to say regarding to the trades that we open or the insights that I share in the webinars. Uh, there is where you will find updates. In any case, they are necessary. Let's remember that this kind of webinars are delivered in a weekly basis, and of course, it's way too much time to maybe not having an update to do. Even though it's been very few videos that I upload there, but it's a very good idea. If you like the content here that is delivered here, that you go and subscribe. I can upload a video there or update something in my Google Plus channel. And in one of the videos in my YouTube personal channel, you can find the instructions where to find my Google Plus channel. So feel free to go there and subscribe. Well, for today, this is going to be a very quick webinar because there are no I won't be opening any trades today because of the natural risks for this next weekend that are the United States elections. Besides, we have on Friday the non-farm payroll number. Of course, we have Brexit-related risks, of course, and if that was not enough, we are facing very severe geopolitical, geostrategic risks because of the war in Syria and the conflict in Yemen and the confrontation between Russia and the United States. So this is not like the most favorable environment to decide opening trades unless you are really sure of what you're doing. So in this case, what I'm going to do is to analyze the trade that I shared last webinar about a potential bullish setup on cable. And actually that indeed happened. Actually at this moment that trade should be very in our favor. It depends on the time frame that you chose, of course. But what we're going to analyze the logic behind that and why I recommend, in any case, that maybe your expiration date is after this weekend, maybe to consider it closing it today or tomorrow, because there is no reason to run risks after the United States elections. Okay, so I'm going to jump immediately to the charts. Okay, well, what you see here is that last week I was commenting in the webinar that I was looking for, let me check exactly the date last week. The date last week webinar was October 26th. So it was here, okay. So at this moment, what I was commenting is that I was saying important risks to the upside here, that the market structure that happened after that latest sell-off of 600 pips from the 126 to the 1.2 to the 1.19 in cable, and the subsequent price structure was signaling me risks to the upside, or what there were stronger risks to the upside. And I was commenting that depending on your experience, you should, if you decided to share my opinion, and you decided to open any trade in that direction, I mean, you needed to do a serious analysis on the time frame you could be feeling comfortable with. I was commenting the latest webinar that if you decided to go against that major price action direction, And if you decided to go short, of course, was perfectly valid, but the time frames to trade it, the expiration dates to trade it, was going to be way more tough, way tougher to find an accurate expiration date because that needed to be way more precise. And this is exactly what happened this latest days. Again, the latest webinar was October 26th, so it was pretty much here. So I was commenting the risks of to the upside, and as you can see, we had eventually sell-offs like this one from here to here, and then from here to here, here to here. But overall, you can see now why I was commenting that the bullish structure that was being steadily formed, and that was the reason I commented that I was preferring bullish trades on the table because the market is structured based on price action. Overall, analyzing the smaller time frames was showing me that the bulls were structurally entering very orderly into the markets regardless of the sell-offs. For example, a lot of people one day before the webinar considered this sell-off that was pretty much a 100 pip sell-off. They consider it like a good excuse to continue selling because it was the beginning of the end for the pound, and just watch what happened after. This happens because of the reason, of course, when we are starting trading, and not only the beginners, even more seasoned traders and even professional traders at times, we fall into this trap following the herd. We need to get acquainted to not opening trades after the move happening. Actually, is to learn how to master our emotions and to find a way where we could open trades when the market is doing the complete opposite of our direction, or if that's very tough for your emotions, maybe finding a neutral moment to open a trade, but not opening in this. I'm going to tell you where, and you can already imagine where a lot of people were opening short trades. It was the zone. And it's no surprise why, at this moment, there were a lot of buyers that made this price to revert. This these kind of movements are normal into trading, and we need to visualize them beforehand we open a trade. When we trade binary options through binary.com, one advantage is that you can forget about the stop loss, but you cannot forget about an entry point, finding the best entry point that you can. But the most important thing is that you measure accurately a decent expiration date. And usually we get so fearful that we open very short time frame ones, and if you had done so, for example, if you decided to open exactly here, when I was commenting that a potential bullish trade was in sight, and you decided to open maybe a 2 hour trade, maybe it would have been profitable. But if you decided maybe to open a 24-hour trade, maybe it would have been in a loss because it would have been closed here. If you had decided to open it in a better entry price, that was the most recommendable thing. Because remember that what you see here is only my opinion. You need to shape the rest of your trade, including to tune the entry price, the expiration date, to check your technicals. I mean, this is the job for you as a trader. Here's only like an overall outlook of what I consider in my experiences is the most probable or the safest direction in regards of the timing. For example, if I was commenting on a potential bullish trade here, if anybody who had opened a 12-hour interval binary option would have been profitable at the end. But if you had decided to open a 24-hour, it would have been in a loss. Okay, but if you had opened, like I commented last week, like a 1 week or 2 week time frame, and that's the sense of all this, that the more time frame you open, the less volatility you will be victim of. If you are really positioned in the accurate direction that the price structure is telling you, the most likely is that you will close it that in a positive zone. But sometimes we are so eager to grab a quick buck to gain money quickly that we forget about that fact. That unless you're a very, very, very good trader, very professional, very seasoned trader, maybe you can actually grab profits consistently in the intraday. binary option, or ordinary forex margin trading. And that is like the ultimate stage of your trading career. And as I've been saying always, if you have been already in that stage, you wouldn't be in this webinar because you would be busy earning money. So I assume that most of us here, well, the visitors here are kind of in the beginner stage or break-even stage. So the conservative approach is much better. Okay, I was commenting here from maybe a 1 week or 2 week time frame trade. So 1 week after, we are well above. Why? Because we based our decision on the market structure, not rushing into things, not trying to push a trade. So this is like the most accurate way to trade. Try to measure your trades between 1 week, 2 weeks, 3 weeks, maybe 3 days, 4 days, very short time frame. In any case, that you are a beginner. Okay, so besides, when I comment on a trade here, that doesn't mean that you cannot do your own job. For example, if I said, well, I am expecting a bullish movement for the next 1 week or 2 weeks, actually you can wait for a retracement to find a much better entry price that would put you in higher possibilities in any case the market moves and favors us in the direction predicted, to be safer in if it's positive, safer in a zone where not even a retracement could put us in a loss. For example, if you had waited for this low to be touched again, you would have been in a loss just few hours, and then all these latest hours well above profit. So what I strongly suggest you, since this webinar is only a review one, and that you go back to the previous week webinar and to check exactly what I said and why I said it, and then compare it with what actually happened and what I'm telling you now. Because it's very easy for a lot of webinarists and people that usually the only intention that they have is to sell you something, sell you an indicator, sell you a service or something, that you can actually check how accurate my comments were last week and how accurate they are reflected today, and if what I am saying that day and today makes sense. And that is where credibility is built upon. Okay. So, well, it depended on your craft and how dedicated you were at this moment. Where I was commenting, I was foreseeing a 1 week, 2 week horizon, a movement to the upside. As you can see, the price action was not lying. The price action was very, at least for me in my experience, was very, very outspoken. That was very willing to start building a bottom here and try to at least find a retracement to the 1.3. And it, depending on your bias, maybe to continue selling. But the cable's been so oversold since Brexit that it's even a strong need to have the market retracing in order to feel to make much more comfortable for the bears to continue shorting. In any case, the direction will continue to the downside. I'm a strong supporter that cable will go to the upside and will actually close the Brexit gap. And about Brexit, well, like we are in a stalemate in Brexit. Apparently, the more time it passes, the tougher it will be to get done, to have it done. Apparently, everything is indicating that having a Brexit would cause an internal domestic political and social crisis in the UK. So that's more than a good reason to maybe rule out the result of the referendum on Brexit. I'm a strong sustainer that the best thing that could happen in the long term for the UK is to leave the EU. Of course, the UK should have to pay a price at the beginning to harvest the good consequences of a Brexit maybe in a decade or two. But of course, at the first 5-6 years, it's going to be very tough for the UK. But I was believing that was the accurate way to go because of how the European Union leaders have been behaving and demonstrated that they are not simply skilled enough to face the challenges that the EU is facing, and it's mistake after mistake. So, but apparently, of course, if leaving the EU would cause a division of the UK, then we're talking about a different thing. We're talking about a national security issue for the UK, and it would that would be more than enough to rule out a Brexit thing. So what I believe that is happening, and the price is more or less reflecting every time, is that apparently the market is not that sure that actually the Brexit will happen. No matter what the Prime Minister of the UK is saying and continues saying, apparently the internal structure, political and social structure in the UK is organizing in a way that will make it very, very difficult to apply a Brexit without having a very strong social instability in the UK, and that's something that the UK doesn't want. So what I believe is that this latest sell-off to the 1.2 zone was reflecting that fact that actually at that moment there were only bears in the market, and that usually signals that it's time to that it's way oversold. And what I understand is that maybe the market at that moment was starting to understand that maybe Brexit was not going to be a Brexit, a hard Brexit, or not even a Brexit at all. So that is why I believe that this is poised to continue to the upside, or at least to the 1.3. And again, even if Brexit happens, and that the most likely thing is that in the short term that would be hurting the pound again to the downside, having a retracement to the 1.3 that would be more than logical. Uh, in that case, that Brexit continues, that would make the pound to go again to the 1.2 and to make it more much more soft landing. Because if we didn't have already tested the 1.2, maybe if we see that the Brexit was actually going to continue, maybe the hard landing would have happened at 1.1, not 1.2. So having the price building a floor here after that huge sell-off from the 126 to the 1.20, it's showing how strong and how how wealth the real intrinsic value of the pound. The pound works a lot because of a lot of reasons inside or outside the EU. That's something that the mass media at some point was trying to convince others that if the UK left the EU, the UK will get into flames and will worth nothing. That's not true. But well, again, and the bottom line of Brexit is that what I believe that the price action's been telling me since that latest sell-off is that the market is actually maybe starting to consider that the most likely thing is that we won't have the Article 50 being triggered by March. Like the Prime Minister said, it's pretty much impossible to have that done in March. And maybe that would be the next year, and next year you will listen to leaders in the UK that maybe next year, and next year will become a decade, and maybe Brexit will never happen. I believe that the market is starting to consider that scenario because the things internally and domestically are pointing to that way. There's going to be a huge resistance socially to leave the EU, and the UK knows what to have a dissident armed army inside. Irish, what was the name? This Irish army in Northern Ireland, and I can bet you that they don't want to have that repeated again. So yeah, I believe that maybe Brexit gradually, the more time it passes and the more time you don't have Article 50 triggered, the more difficult it will be to get triggered. And the market's reflecting that fact. So that is why, again, last week I was commenting that besides the geopolitical risks that we were running, that you needed to be very aware of that if you wanted to open a bullish trade or a riskier trade to the upside here. If you decided to do so, the volatility, the clear direction should take like 1 week or 2 weeks to really see it moving, and that's actually what happened. Okay, so the bottom line in this is take it easy. Don't rush into things. If you're actually in your beginning stage as a trader, or if you are in that break-even stage that you win and you lose, and at the end of the month you are exactly where you started at, don't push into things. Try to gather the most information that you can in any trade, based on fundamentals, based on technicals, based on price action, based on your nascent or mid-developed edge skill that you maybe you have already, and try to tune it until you find a way to trade that you feel comfortable. It takes a lot of time. You're listening to a person that took him more than 10 years. Well, not more than 10 years to become profitable. But yeah, I can tell you that in my first 5 years, I didn't know what was to be right. Okay, so it takes a lot of time. So you need to visualize trading as a long-term task, maybe measured in at least 5 years horizon or even more. So there is no rush into, don't rush into things and trying to guess the bottoms and the floors. Some people were telling me that what I was actually trying to do, buying the cable at this movement, was trying to guess the bottom, but that's not precisely accurate because I was not only buying just because I was seeing this selling off. I was waiting and I waited pretty much 2 weeks after that sell-off happened, watching the markets calmly without any rush until I was convinced that the price action was telling me that the risks to the upside were increasing. And then this is what happens. Patience pays off. And with a little bit of luck, the information that I deliver here will help you, like, I don't know, maybe to have a different angle to understand how to develop your edge and how to understand patience. Okay, as you can see here in this chart, you can choose whatever price that you want and whatever time frame and time expiration window that you can, and you can find as many as profitable or losing trades that you can. If you had opened a bullish trade here and you close it here, it would have been a loss. If you had opened a bullish trade here with a very small time frame, it would have been closing a loss. So trading is to master all that, to find the midpoint exactly of the timing that a trade could take, the direction, your bias, your edge, technical, fundamental, everything. That is trying to master. Imagine that you're moving these clowns that make these tricks with their hands and moving and swinging a lot of baseballs in their hands, like 3, 4, 5. Imagine that trading is that. But instead of 5 or 6, you need to master like 20 or 30 at one time. So it takes a lot of time, but you can make it if you decide to take it seriously. And then everything you will start hunting the precise trading and entry points that could actually increase your chances. Okay, so well, that's pretty much on this trade. What I can tell you is that due to the overall this latest uncertainty in the United States elections this weekend, uncertainty, not that, maybe that's not the accurate word. Why? Because it's pretty much sure that who's going to win is Hillary Clinton. Because in the United States, you don't win because of the votes. You win because of the states you're winning the votes. So if you are winning the states that are that weight more in the electoral college, I believe they call it, she's going to win. But the real problem of this election in the United States is that it will be very tough for Hillary Clinton if she wins because of the electoral college. But actually, the polls show that actually Donald Trump was by 1 point, or not even 1 point. Things are so tight now that you're going to see a lot of analogies of what is happening in Brexit. It was a very narrow percentage of people that cast a Brexit vote. And that is very hard to deal with. So the United States, regardless who's the winning, going to face a lot of problems socially, internally, domestically, because it's going to be a very difficult country to rule, because there will be a lot of people disagreeing with the results. And imagine a country that is won by somebody that just because it's very sophisticated and strange way to measure voting, like the college, this this way the United States measures the votes. But imagine that actually having Donald Trump in some polls winning 51% of the preference, people it's not going to be that easily convinced that who won accurately was Hillary Clinton. So the problems are far from ending now. Actually, after the elections in the United States, actually the problems are going to begin even bigger because it's going to be very difficult to find and to legitimate a winning in these conditions. So what I want to believe is that regardless of who wins, we're going to see a lot of volatility. And we can see a lot of trades, riskier trades moving against us, like this one. Opening, shorting anything that is not the dollar, you can consider it risky trade. So what I believe that's going to happen after the elections is that it's going to be clearer and clearer how much social discomfort it will happen if Hillary Clinton wins. That apparently is the one that's going to win because of this electoral voting, but not because of the real will of maybe the people in the United States. It's very divided, the opinion. So I wouldn't be surprised to see the volatility and everything selling up just after, not before. So this is why, and overall because this latest huge jump in by Donald Trump in the polls, these latest 3 days, that's very strange. So if you decided, if you manage to have this trade open, it's maybe a 2 week time frame, etc. Just close it before Friday, before non-farm payroll number. We really have no idea what's going to happen after non-farm payroll number. We really don't have an idea. Okay, so just if it's already in profit, if you follow more or less the logic and the best practices in trading, this trade should be positive by now. Just close it. Maybe it's not at the 100% maximum profit, but it's way better to close it now because besides we are hitting a resistance now. So just my 2 cents on that. And you should be happy. You should feel happy if you decided to take the risk in this trade and it's hovering in positive now. Just close it. It's a good one because actually opening a trade in the conditions and the environment that we open it was really tough. And call it correctly. In such circumstances, you should feel good about having this result at the end. So there is no real reason to continue holding onto the risks. So my recommendation is that you're hanging to profits in this trade, just close it. And if you, for example, if maybe you open the opposite side, or well, you need to decide what to do with it. But at least in the direction that I commented, that I thought the market was going to move in the 1 week, 2 week time frame, you should close it in profit now. Just wanted to let you know this. I've been commenting that what was supposed to rule the markets in the future was this potential OPEC agreement on cutting production. If you've been aware, the latest news, apparently Iraq is trying to sabotage that, defending the interest of course, the United States. And apparently what this is the Brent chart. It's been selling and selling off way below the 50. I've been commenting latest webinars that according to the latest price action of these latest 3 weeks, the market in the oil was pointing out that maybe it was going to move to the upside, and that would hurt the worldwide economy and would put it in the brink of a recession worldwide. But apparently the things are settling in a way that if any OPEC agreement happens at the end, maybe it's not going to be as aggressive as previously initially thought. And that is what the prices of oil are telling me since this draft of a potential production cut happened in Turkey. I've been watching oil very close from that time. Why? Because that would have, if you remember last week, I decided to open that long trade on cable because it was aligning that actually the price of oil stopped moving to the upside, because if for some reason the prices of oil had continued moving to the upside, I wouldn't have opened any short dollar trade at all, because the risks, in my opinion, of having the prices of oil moving up and up was putting the worldwide economy in a matter of some months in recession worldwide. So of course that would have ruled out any short dollar trade. But since the market of oil was pointing me that maybe the uh, the shortage in production, that cut in production was not going to happen at all, or maybe not being as aggressive as initially thought, that pushed me. So that is why I was telling you that trading is like moving a lot of baseballs in this clown, moving a lot of baseballs in his hands, because you need to be aware of a lot of factors. Opening in this case, opening or not a trade to the upside was marked not only by the intrinsic price action by the pound versus the dollar, but besides, when everything aligned and the prices of oil started moving down, is when I decided that was the time to take the risk. Not before. There were a lot of risks aside besides the OPEC decision. So having one risk less, at times it means a lot. So even though we're having a lot of conflicts in Syria, a lot of conflicts in Yemen, this escalating accusations between Russia and the United States, escalating this thing, uh, the NATO, etc. Well, maybe you won't find a situation in the world that it's a perfect safe trade. Of course, that doesn't exist. But of course, having all that things happen in the world was putting me very, very conservative into opening any trade. When I saw the prices of oil moving a little bit down, just because of the meaning that I was giving to the prices of oil moving up, then I knew that it was worth to take the risk, because you reduced a little bit the risk, and then you should be ready to go. So for the ones that follow that trade, I would like to congratulate to all of us, because it was a good trade. Maybe for the ones that miscalculated for some days or week, this trade, maybe some of the trades won't be closed at the maximum profit. But this is the one of the proofs that, first of all, you cannot win them all in trading. I was commenting some webinars like 2 or 3 weeks ago. We opened a trade that went against us. I was managing it, etc. At the end, was barely in profit at the end, the result. But it was like 1 or 2 weeks trying to manage that trade. So you cannot win them all. But the idea is not to lose the calm, and to think with a cold mind, not rushing into things, not trying to push to recover the losses in 1 hour or one day. It takes time. It takes time to harvest, to be good at anything, at any activity that you want. And trading is actually, in some points, more difficult than some other activities. So again, it's not pushing or rushing into things, and pushing the trades, and really being committed into have a worldwide and overall surveillance on pretty much what is happening in every place. That is why people that makes a religion around technical analysis, they are pretty much uh, doomed, because when you see the impact of the geopolitics or of this OPEC thing, etc., and building a religion surrounding on technical analysis will eventually fail, because technical analysis doesn't think. It's a bunch of mathematical tools. You need to think, and the tools are there, but they don't think by themselves. They cannot factor in exactly for example, a sell-off. You need to find a way why the sell-off happened, to give it a meaning, and that's something that the technical analysis won't do, because it's only a mathematical formula. You can use it as a tool only. And being really committed into to take this seriously is to be aware of a lot of factors. I received a personal comment elsewhere saying that was doubtful that the reason and the timing of my bullish trade on cable was based on the oil market. This person sustained that was nonsense. Well, I don't know if it was nonsense or not. The thing is that it worked for me. And you need to find things that work for you, even if some people don't understand it, maybe they don't like it, whatever. Trading is something relative. Everybody will have their own truth. So what you see here is that you need to have and you need to be able to connect different things and to know that there is a direct influence of the OPEC decision and the conflicts happening in the Arabic Peninsula. Okay, Syria, Yemen, and just around the corner is Saudi Arabia, the biggest producer of oil. So of course everything is affecting everything. And before opening a trade, you need to be aware of all that and how that is reflected in the price action. Not only watching technicals. Okay. So, well, I believe it's pretty much for this webinar. In this case, let me close this. In this case, and this is like for your knowledge as a trader in the future. First of all, again, for like fifth time in the webinar, don't rush into things. If I had rushed into trading just because the latest combo of trades was barely in profit or barely in a loss, and I was in a rush of recovering those that maybe slight loss in a matter of 1 hour, 2 hours, and not being professional and analyzing and giving you the time to analyze what's happening in the world. The most likely thing is that you will end up losing everything. So even if you lose, you need to understand that is part of this craft. You cannot win them all. And the lower the time frame that you trade, the more close to the 50% you will get, and only if you are a super trader. If you're trading the tick charts and you are 50%, you can consider yourself a genius almost for trading. The longer the time frame that you get, the more you will get to the maybe 60, 65, but maybe getting so greedy to get the 90% of the trades positive and then start believing that that is becoming a trader, that's not necessarily accurate. The best traders in the world maybe make it 60%, 65 in the very long-term positive trades. And I'm telling you, I'm talking to you that those are one of the best traders in the world. So have a conservative approach. If you have that slight possibilities of long-term success, you need to cherry pick precisely and with a cold mind the best trading opportunities for you. In this case, as I said, if you decided to open a trade, let's imagine that you opened, me myself personally, was a 1 week trade and a 2 week trade. So one's just about to close, and the second one, I'm going to close it manually because I won't wait more days. We are hitting a resistance, and because of all the environment, the risks to the downside now are getting higher and higher. So there is no way to risk it. Just to be greedy, to say, no, I need to be right. No, that is not the name of the game. You need to adapt. And if you need to close a trade in a loss, you close it. You don't start praying for that trade to become profitable. You just close it. Okay, if you have a positive trade that has chances to retrade, you just close it. You just don't get greedy. So now we should have my idea is having no trades open during the next days. It is very important that we understand that the mixture of things, overall the things happening in these latest days, and you maybe are aware of that Donald Trump is getting a lot of support lately in the polls, that maybe that won't change the final result for the election. But of course that will change the perception of the American people if Hillary Clinton wins. While Trump being above in some polls at the moment, they realize Hillary Clinton won. That won't be easy for her to govern that country. Because I can tell you That if that happens this time, there will be a strong pressure inside the United States to switch and to change the way they vote. And they will demand that the majority opinion counts, not based on this very strange way that they vote. So that is not going to be easy for Hillary Clinton to rule the country. And there are some, economic risks on having Donald Trump elected because of the wild idea that he's supposed to apply that would affect the economy worldwide. So the idea is, imagine that this is the closest event to a Brexit. These are the real risks because we have no idea what will happen. Overall, we don't have an idea what the non-farm payroll will look like. The non-farm payroll this time will define the next Fed decision, but of course that will be defined by who wins and how society reacts to the winner. So we have no idea what's going to happen in the next months. The idea is consider this as a Brexit trade. Just have no trades opened. There is no reason to run unnecessary risks. And if you decide because you're an adrenaline junkie, then you are not trading, you are gambling. And then these webinars are not for you. And you should have a lot of fun in Las Vegas. At least you get free booze there, even if you lose. In trading, nobody's going to offer you a free booze if you lose. So if you're an adrenaline junkie, go to a casino. You will find a lot of fun there. But if you're a trader, consider the risks of holding anything open during the weekend is kind of a suicide thing. It's kind of a coin flip. So just chill out, enjoy the outcome of the American elections, even if you're not American. Watch it. See how the forces of the economic forces, the social forces interact. Try to give them a meaning, because the meaning that you start giving to those events now are the ones that will start shaping your next trades next month. So that if we decide to open a trade maybe in a month or 2 months or 3 weeks, whatever, when we find a chance, we are the best informed and we are very, very sensitive to what the market, how the market is really feeling. Okay. I would like to thank everybody for showing up. I really appreciate that you come by and listen to my words. I would like to remind you that next week I will be delivering this very same webinar at the same time, same place. You will receive the usual mail that you always receive. And again, don't rush into things. Be brave enough to sit on your hands and wait for next week. Enjoy this, because otherwise you have a strong chances to start sweating bullets during the weekend. Overall, if you cannot touch a trade and if you are not calculating well the risks, you will have a very tough weekend. So just enjoy it. Okay, I would like to thank Ben for hosting this webinar. And remember that you will receive tomorrow or in some hours the reminder of this webinar being uploaded if you want to re-listen it again. And feel free to share it, of course. And remember that I expect you all next week, same time, same place. Remember to trade safe, be safe. This is Alberto Alvarado, and bye-bye.